The fear was that Google's dominance would shrink, its synergies would weaken, and its margins would collapse. But in mid-September of 2025, a major judge's ruling changed the game. Alphabet has now crossed a $3 trillion market capitalization right after the ruling confirmed that Google does not need to be broken up under the antitrust allegations that were being reviewed. This is huge. It takes away one of the darkest clouds that had been hanging over the stock for years. Think about what this means. For a long time, many institutional investors demanded a discount when valuing Google stock because of the regulatory risk. The logic was simple. Why pay a high multiple for a company that might be dismantled? Now, with that specific threat pushed aside, at least for the foreseeable future, that discount no longer makes sense. And it is not just about avoiding a breakup. The ruling indirectly signals that regulators, while critical of big tech, also understand the importance of Google in the global economy. Google powers information access, cloud infrastructure, AI research, and even parts of national security through its data centers. Splitting that apart would not just hurt shareholders, it could also destabilize industries. Alphabet hitting the $3 trillion market cap milestone is actually a big deal. It joined the ranks of only a handful of companies in history to ever reach that scale. Apple, Microsoft, and Saudi Aramco have been there. Now Google stands alongside them, showing investors that despite years of doubt, the company continues to grow into one of the most valuable businesses on earth. And here is the kicker. Even at $3 trillion, Google's valuation compared to earnings and free cash flow is cheaper than Apple or Microsoft. That tells me the market still isn't pricing in the full growth potential. While we are on that note, let's move from regulation to fundamentals. Many people still think of Google as just search ads. That is outdated. If you look at the financial breakdown for Google, you can see the strength across different business units. Search and advertising remain the cash machine. Billions of people search Google every single day, and advertisers continue to pay a premium to be at the top of those results. YouTube is essentially the second largest search engine in the world, with video ad demand still rising. Then we have Google Cloud, which is growing rapidly, competing with Amazon Web Services and Microsoft Azure, and now winning major AI infrastructure contracts. The key point to understand here is that growth has not slowed. In fact, revenue acceleration is coming back after a period of worry. Over the last few quarters, Google's total revenue has been climbing faster than many analysts predicted. For a company this size, acceleration is rare, and it signals that innovation is paying off. And the most misunderstood part of Google the last year or so is, in my opinion, the search core business. This business is still growing rapidly. Growth for search has reached over 10% once again, comparing Q2 to the previous year. This signals the business will continue growing at a rapid pace, even with AI developing in the background. I actually think artificial intelligence will further accelerate Google search growth in the coming years, for the simple reason that Google is the only company with the power and scale to implement AI into all of its services to a very large extent. I actually think a lot of the growth we are seeing for Google is being driven by artificial intelligence. For years, the market treated AI as a threat to Google's core search business. The idea was that chatbots and generative models like ChatGPT could replace search queries, stealing traffic and destroying ad revenue. But what is actually happening? Google has integrated AI into search. AI summaries appear at the top of results, guiding users more efficiently, while ads are still present. Instead of losing business, Google is making search more valuable. And here's the best part. The valuation is still extremely cheap. Google trades at a lower forward price to earnings ratio than Microsoft, Meta, and even Nvidia. When you compare free cash flow yield, Google is generating enormous cash that it can reinvest in AI, buy back stock, or expand its cloud infrastructure. In my opinion, this disconnect exists because many investors are anchored to the old fear: what if AI disrupts search? The reality is the opposite. AI is becoming a growth tool that amplifies the moat Google already has. The network effects of billions of daily users, the data advantage, and the infrastructure all mean that Google is positioned better than almost anyone else to profit from the AI revolution. So while the market sees Google as a $3 trillion giant with limited upside, I see it as a company still underpriced compared to its growth runway. Now let's talk about the actual competition for Google. OpenAI's ChatGPT was the big headline product for the last 2 years, but recently Google's Gemini has been catching up and in some regions surpassing it. A recent metric which went viral on multiple social media platforms pointed out that Gemini has overtaken ChatGPT in Google Trends across several countries, especially in Southeast Asia and South America. These are not small markets. We are talking about hundreds of millions of young, mobile-first internet users. If Gemini is becoming the default AI tool in these regions, it could create a massive growth driver for Google over the next 5 years. One viral feature in particular, called Nano Banana, helped Gemini spread quickly. At first glance, it sounds silly, but virality often comes from unexpected hooks. Once people download and try the app, they tend to stick because it integrates seamlessly with Google's broader ecosystem. And here's what matters from an investor's perspective. Emerging markets are the biggest untapped monetization opportunity for Google. Developed markets like the United States and Europe are already mature, but in India, Brazil, Indonesia, and many other countries, internet usage and digital spending are still accelerating. If Gemini becomes the leading AI assistant in those regions, Google will be in position to monetize through ads, subscriptions, and services for decades to come.